Hey guys, this is Bruce. Welcome to the newsletter for June the 11th, Thursday, June the 11th. We got a lot to talk about, so we'll jump right in. The market has been all over the place, as we know. Let me get my drawing tool over here. This is the SPX. We know it's been all over the place. We did the straight up thing for months and months and months, and now we're doing the straight down thing, which is not comfortable either way. It's very hard to tell where this thing's going to go. We're all the way back to the 50-day moving average right here. So maybe that holds. This market feels heavy. So I don't know. It's going to be tough to tell. But we have PPI in the morning, or I'm actually recording this on Wednesday afternoon. So PPI is in the morning, and then we have SpaceX IPO on Friday. So maybe that will give us a shot in the arm, especially on the tech sector. We shall see, right? But I have three names that we need to consider right now, and we're looking for honey badgers, things that aren't, too tied to the market for the most part. The first one is Powell Industries, POWL, Powell Industries. And Powell Industries is an industrial manufacturing, power systems. Obviously that's going to help with the AI build out and all that kind of stuff. We've come back down. There's the 20, there's the 50. We have a lower left, upper right. Nice looking chart. Up there at 328 at the top, and then came back down, and again, we've breached the 20 with the tech stock selling off. It trades on the NASDAQ. We're at the 50. I'm thinking that should hold. I like the name here. Powell has 3-year sales growth of 28.4%. It's pretty good. 3 years earnings growth of 162% with a profit margin of 16.4%. So that's pretty strong. Debt to equity ratio is 0.03. Very, very good, right? RSI of about, I've got the stats over here, RSI of about 61. So I like this. This looks pretty good. Again, I'm looking for stocks that are not, they're kind of outliers, not really following the market to the tick. This one looks like it should have support right here. So I like this. Put that on your list and consider that one. The second one is DRS, which is Leonardo DRS. Now this stock's trading about $46, $47. Industrial, aerospace, and defense manufacturing. Now this thing has been, this is a little more, I try to give a blend of, maybe conservative trade, maybe an aggressive. This is definitely in the more aggressive category. Lots of back and forth action. This has come up several times, quite a few times on lists and scans that I look for. Now, this one could also be good for like a collar or, maybe covered right or something like that. But be aware this is, a little more aggressive play. We're coming back into the 20 right here. Again, this is kind of the outlier of the group, being a little more aggressive, but I think there's a lot more upside here. There's a lot of volume, institutional volume coming into this stock, which means it should go higher, right? Debt to equity ratio is about 17.3%, so it's still very low. Profit margin is about 7.6%, but this is kind of an up and coming stock. Let's go back here and look and go back 3 years and see. So that chart looks a lot better, right? Lower left, upper right. And I think this is the way it continues. Again, there's institutional accumulation of this name. That's why it's on the list. RSI of about 67. So put that one on your list. I do like that. And the third one is NOV Inc, which is an upstream energy support company, oil and gas, the whole sector did really well, and then it's kind of pulled back. This one really has not pulled back. Again, we're looking at the blue line's a 20-day, that kind of amber line is a 50-day moving average. It's held, held here. And it's about a $20 stock. So again, this one is another one we could consider for a covered right or something if we're just going to buy the stock. Great looking chart and strong move, again, across the board on here. Let's go back and see where it's come from in the last couple of years. Wow, it's over here 21, came all the way back down and all the way back up. So this is another kind of up and coming one that I do like. Money is flowing into this. Institutional money is flowing into it. 1 year's earnings growth about 58.7. 3 years earnings growth rate 141.3. Again, you'll see a boomerang effect for that if that continues in earnings growth rate and profitability going forward. RSI about 48, which is much better. And short interest is like 5.2%, so that's not much out of the ordinary. But let's look. I actually have not checked the dividend here. It has 1.71, and that dividend's coming up on the X date's on Friday. If you get this on Thursday and you can buy, you'll catch that dividend. It's not a huge one. It's 1.71 or 9 cents a share. It's a $20 stock. So the dividend's not that large, but it's worth noting, right? So again, there's a lot going on in the market right now with uncertainty in the Middle East. Of course, we had hot CPI number, inflation's red hot and all that kind of stuff. So that favors a possible rate hike at some point. Got to be careful with that. Again, we have a Fed meeting coming up. Next week we have Fed meeting coming up. They're not going to do anything, I don't think, at this meeting. But the guidance, will tell us a lot, right? And then in a couple more weeks, I think it's about 3 more weeks, we'll start getting back into earnings season. We should have some great earnings and all that. And in the meantime, we have SpaceX to watch out for. So we could go either way here with the market. Just be careful, try to keep some powder dry. But I wanted to give you some names that looked good, especially in this kind of market. So with that, let me wind it up. I will have the next update for you guys on Tuesday. So thanks for the time, guys. I appreciate it. Be careful out there. Good trading. Thanks. Take care.